Um, Thanks so much. I started a company called Prodigy Finance about 10 years ago now, and it was a very personal journey for me, which went something like this. I'm a South African, I was living in Malaysia, and I got accepted into INSEAD graduate school in France and Singapore, and I needed a loan to attend because I didn't have the funds at the time. And I applied to what is otherwise known as the world's local bank, and if you've been to any airport, you will see that message all over the place. And I had a discussion with this particular bank at the time, which went something like this, which was, I am going to INSEAD, I need a loan for about 40,000 euros, and they said, okay, no problem, but it's in euros, so unfortunately, because there's a currency change, i.e. we're going to be lending to you in sterling, we can lend you 75% of the amount. I said, okay, perfect, that sounds good. They said, obviously, you need to put up 100% in cash to be able to lend you back the 75%. And I said, okay, that sort of defeats the purpose of what I'm asking for here. And realized with that for me personally, I had to defer my studies for the year. I couldn't afford to pay. And also realized a pretty simple piece, which is that talent is pretty distributed globally and is completely borderless, but finance is not. For the last 500 years, the banks have thought about finance in exactly the same way, which is that if you live in a particular area and you live there all your life, the banks are very comfortable for that. So Barclays lending in London, if you've been in London your whole life, you move one street across 6 months ago, that's a little bit mobile for Barclays if they're sort of thinking about you. So if you're a kid who's coming from Ghana, who's going to Oxford or Stanford or pick any university, it's so far off the beaten track for someone like Barclays that it's very difficult to think about. So the insight for me at the time was, this is fundamentally unfair, that your access to funding is determined largely by where you happen to be born, and two, that it's going to be a very difficult problem to solve, which I'll explain in a little bit, and three, that it was impacting a significant amount of people. Very firstly, you had 5 million international students mostly from emerging markets, coming to the top universities who didn't have funding. Number two, you've got 250 million people in the world who live outside of their home country and experience similar friction points. And three, you've got about three-quarters of a trillion people, 750 million people, who are going to be entering tertiary education in the next decade from the emerging markets, 65% of them for the first time ever. So they don't have the family wealth to be able to support their education. So looking at it, I try to understand, firstly, why is this the case? What's the issue here? And the problem is pretty simple, which is that data for risk is essentially localized and also heterogeneous. So the bureau data you would get on someone in Ghana is completely different to the bureau data you would get on someone in the UK or the US, and access to that data is also extremely difficult to arrange. So in thinking about someone's initial risk assessment, how do you even think about the risk of someone who's crossing a border from Indonesia to the UK? The banks aren't plugged into that. Secondly, someone who is mobile, who has the potential to move back next year to Ghana or to wherever, how do you think about even just operationally collecting every year? If you're making a payment from Ghana every month to the UK, it's going to cost you $30 in FX fees and going to be extremely difficult. And thirdly, how do you enforce a legal contract across multiple countries? And how do you get that right? So the second bit was then thinking about, okay, well, how do we go about solving this? And when we started, my belief was that we could create a platform that would be able to look at someone wherever they were in the world, be able to assess their potential, and be able to fund against it and be able to collect against it. And we got some very choice words when we first started about whether that would be a good idea or not from multiple people who said, if there's one bit of advice we can give you is absolutely do not do it. Thinking about a regulated business across the whole world is not making smoothies, and probably you should find a better idea. So we said, okay, amazing, let's give this a go. And And when we started, the challenge for us compared to, let's say, a domestic fintech lender, so if you look at anyone in, let's say, the US, like a SoFi or a Common Bond, or any of the domestic platforms in the US, or pick your country in the UK, a Zopa or someone else here, there's nothing fundamentally innovative about the model, about how they assess credit. You're using a bureau score locally, you're using an enforcement model which is tried and tested for the last 100 years, and you can use a third-party servicer or a servicing platform that has done this for every other bank, and their dog. So if you're a US domestic person looking to get credit, and you're a new fintech platform in the market, it's extremely competitive because there's 400 other banks and platforms that want to lend to that person domestically. So your margins are extremely thin on the business side. Your acquisition costs are extremely high because, again, 400 people are going after the same person. You need to run Super Bowl ads to do it. Compared to our space, but sorry, on the easy bit of the business model is your ability to scale your capital, because you've got a proven model that you don't need to demonstrate anything innovative on, that with proxies that you have from the credit bureaus for 5 decades, you can show how the model is going to perform. So it's easy for you to raise capital to lend through the platform. Whereas for us, each of those elements are extremely difficult. How do you do the initial risk assessment? How do you think about a global enforceability model? And how do you collect globally across the world? And so when we started, 100% of our funding was crowdfunded to the alumni of the universities. So Oxford alumni would fund Oxford students for a return. It's not a scholarship. It's a loan to the student with a return to the alumni. And initially, while we were proving out the model, we grew 100% with alumni and community funding. We then did a partnership with Credit Suisse to distribute to their private clients and family office space. We've since done about 150 million with Credit Suisse in distribution. And over time, we were able to prove that, hey, the model actually works, that you can look at someone, that we're able to assess them, that they will pay you back with rates that are comparable to the top domestic lending platforms, and all of that will actually work. So what that allowed us to do was to really sort of scale up our capital. So in the last 12 months, we've raised just over $1 billion of capital to lend through the platform. We've funded people from 130 countries in the world. We have a repayment rate and a loss rate which is exactly comparable to the top premium domestic lending platforms. And we're really showing that the ability to think about finance without borders, which is where we think it's going to go, that there's no reason that finance should be localized, is actually possible, and we are the pioneers in leading this out. So just where we are as a company, we raised our Series C last year, which Index Ventures led. Our Series B was led by Balderson Capital. We've raised about 60 million of equity capital for the business. We're a team of about 180 people between London, Cape Town, and New York. And we've got a great base of investors, and more recently, we've proven that we have the ability to scale the capital side of the business, which allows us to expand out, firstly, into the massive market. We've always had significantly more demand than we could meet across multiple universities. The universities act as our acquisition channel because we're solving a real problem for them, unlike domestic lenders. They want the best people from around the world. Many of them cannot afford to attend without us in play. So about 80% of the people that take a loan through us would not otherwise be able to attend. And we've proven the ability to think about that next step into thinking about making the world truly borderless in terms of how people think about credit. And so being able to address the 250 million people in the world who live outside of their home country, someone who's moved a country who has significant friction points in access to funding, as well as those 750 million people who are going to be entering the middle class and enrolling in tertiary education down the line. So that is us in a nutshell. Thanks very much for listening, and it's great to be at this conference. Cheers.